There was a time when electric cars seemed very stupid, and it wasn't that long ago. And the idea of creating a car company was stupid, of course, and then making an electric car company was like stupidity squared.
What's going on, guys? Today we're going to be talking about Tesla and NIO and how the Tesla and NIO bears are officially back. Morgan Stanley recently said that Tesla, worst case scenario, can be going down to $10. I'm going to be giving you guys my thoughts and my opinion on that statement. And not only that, we're going to be looking at Tesla and NIO stock, because these are two electric car companies that are trying to change the world, and for some reason the market does not seem to like these two companies. But mostly I want to be talking about Elon Musk and how he single-handedly is changing the world, not trying to change the world. He already changed the world. I want to read something. This was from Forbes in 2011. Electric cars are an extraordinarily bad idea. This was from LA Times in 2009. More like a glorified golf cart than a harbinger of tomorrow tech. And this was from the Daily Mail in 2011. Sorry, but electric cars are a waste of space. And now this is what we see today. So we have General Motors is going all electric. Ford goes all in on electric cars. Volkswagen is betting its future on electric cars. So 10 years ago, electric cars were a joke. Today, Tesla started this electric car trend, and now companies like Ford, GM, even Audi, it doesn't matter. You name a car company, they're going electric. And that's because Elon Musk took that risk, and he is slowly changing the world.
And our goal all along has been to try to get the rest of the car industry to go electric. We did a joint venture thing with Toyota and with Mercedes. We open sourced our patents 3 or 4 years ago, made them freely available, so it's extremely rewarding to see that the rest of the industry is going electric. This is great.
I'm going to be getting into a lot of details in this video. We're going to be looking at Tesla stock. We're going to be looking at Elon Musk and how he's changing the world. And also we're going to be talking about what you're betting against when you're betting against Tesla.
So what are we betting against? We're betting against a cleaner earth because we don't like that. We like to suck in the carbon monoxide and the fumes from all these cars. We're betting against...
Before we get this video started, let me know in the comment section what you think about Tesla and NIO. Give me your opinions on both stocks or one or the other. Which one is your favorite? Which one you prefer over the other, and why? Also, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button, and let's get this video started. So we're going to be looking at both Tesla and NIO. So first we're going to look at these charts real quick. In the past year, Tesla has gone down over 30%. If you look at their high point, which was on December 12th, Tesla has gone down almost 50%. Right now, Tesla is down 37.85% year to date. Even if you invested into Tesla 5 years ago, you would still be down 0.94%. So pretty much in the past 5 years, if you've been bag holding Tesla, you would still be in the red. So it's not looking good when you're looking at these charts. We'll look into NIO real quick. Since NIO's all-time high at $10.16, which was on March, NIO is down over 60%. Year to date right now, NIO is down 34.68%. Since its IPO, NIO is also down 55.35%. Let's look more into these charts. So we have NIO right here, currently sitting at $3.94. For the first time ever, it's below $4, and if we zoom in right here, NIO does seem to be currently downtrending. So the real question is, how low can NIO continue to downtrend? If we continue at this pace, which we could extend this line, which I doubt will be downtrending forever, but that would mean that NIO will hit $1 by mid-October 2019. This is why I've mentioned this is a very high risk stock. So Tesla right now is sitting at $194.37. So Tesla has not seen these numbers since December of 2016. We do seem to have a support right now at around $180, which we almost hit today. If we break below this support at 180, Tesla can go even as low as 140. So now there's also some news out there of these short sellers saying Tesla can drop all the way to $10, which I do think is ridiculous, because if Tesla was valued at $10 a share, that would mean Tesla's market cap would be at $1.2 $1.73 billion. With a total revenue in 2018 of $21 billion, I think that would be way undervalued. At that point, companies like Google or Apple, which I do think both those companies at one point tried to purchase Tesla.
People who short this company are so short-sighted because the number of companies that would come out of the woodwork. You don't think that Apple, with $200 billion of cash, backstops this company and has a chance to enter a $1 trillion market overnight by buying that business if it gets imperiled in any way? Google, which already tried to buy it, wouldn't try to buy it again?
I'd say it's a risk.
So what are we betting against? We're betting against a cleaner Earth because we don't like that. We like to suck in the carbon monoxide and the fumes from all these cars. We're betting against beautiful flat screens, beautiful ways in which to manage your experience inside the car because we don't like that.
No, we're betting
Why?
against whether he can deliver what he says, the fundamentals of the company. That's what they're betting against.
No, that's not true. People are betting against his style. They don't like his style.
It's not just that.
Tesla would be way undervalued at $10 a share. So the fact that anyone could say Tesla has the possibility of having a market cap of less than $2 billion with a total revenue of $21 billion is ridiculous. I do think Tesla has the possibility to go, like mentioned in this chart, as low as 140, maybe even dip a little below that to 120, but anything lower than that, at that point Tesla is way undervalued. We're going to also be looking at Tesla statistics. So right here you have the 5 best-selling cars in USA in Q4 of 2018, and you see Tesla there in the 5th place. And also for the 5 best-selling cars in USA in all of 2018, you see Tesla Model 3 in 5th place as well, which seems to be the only American car there. And then you look at Tesla's quarterly sales delivered, and then you compare that to the Model S and the Model X, and the Model 3 has just been killing it. And not only that, when you look at mid-sized luxury auto sales in the USA in all of 2018 versus Model 3 in only Q1, Tesla has outsold all their competition, which includes Lexus, Mercedes, BMW, Lincoln, etc. I want to talk about Morgan Stanley. Tesla shares could drop to $10 in a worst case scenario, Morgan Stanley says. So we already talked about how ridiculously low $10 a share could be, but let's just get into this. Morgan Stanley has cut its worst case forecast on Tesla stock from $97 to just $10, citing concerns about the company's debt loads and geopolitical exposure. Morgan Stanley expects the company to sell an average of 165,000 units in China annually between 20 and 24, leading to a sales exposure of about $9 billion every year if the product is worth 55,000. However, in a bear scenario, it assumes Tesla loses revenue with a fall in margins as the years progress, resulting in a lost value of $16.4 billion, which on a per share basis is $87, bridging the gap between our old bear case of $97 and our new bear case of $10, the note said. However, Jonas kept his price target for the stock at $230 and also has a bull case forecast of $391. So we have Morgan Stanley right now. He's talking about worst case scenario, Tesla can go to $10. He kept his target price of $230 and also has a bull case of $391. So this guy pretty much covered every number on the board. So he pretty much made it impossible for him to be wrong. And we're also going to look at Jim Cramer and what he thinks about this.
Look, what I find specious here is the $10 price target. I mean, yeah, like Hamilton. I mean, it's a Hamilton story. I mean, it really is insane. He picks 10. How about 8? How about 12? I mean, 10 just basically says, we're going to get talked about on Squawk in the Street, and I want to get talked about. Let's talk about me. So there, we just talked about it. I mean, if he had done like 47, would we talk about it? No, but 10. 10's right in your face, and that's the problem. $10, you can't be a hold and have a $10 bear case.
It can't be a hold and have a $10 bear case.
So there you have it. Even Jim Cramer thinks $10 price target is ridiculous. So we're going to get into this article, which is Tesla stock hit again by bearish comments, gets lift after Musk email. So Tesla stock bounced around Thursday, first sinking on bearish comments by Wall Street analysts, then rebounding after chief executive Elon Musk claimed quarterly vehicle production would set a new record. Stock initially plunged almost 6% in the pre-market action after a prominent Morgan Stanley analyst said the electric pioneer is distressed and no longer a growth story. The fall in Tesla stock also came as another analyst lowered his first quarter delivery estimates. The tide turned as reports surfaced about a written comment from Musk Musk in an email to staff. Musk said first quarter deliveries will exceed the company's fourth quarter records of 90,700. He said Tesla is producing 900 Model 3 cars per day and is on the verge of reaching 7,000 vehicles per week. Tesla stock initially rose 2% when the email report surfaced during afternoon trading on the stock market today. But then again, let's not forget, Elon Musk has always made promises. He's the type of guy that overpromises and sometimes over-delivers, but it does take Elon Musk a very long time to over-deliver. I think Musk would have a better chance if he under-promised and then over-delivered. So now we're going to move on to a little bit more news for Tesla, then we're going to touch up on NIO, which is why Apple would have the inside track on buying Tesla. So Apple would be the front runner amongst its fellow tech giants at making a successful bid to buy reeling automaker Tesla, according to Gene Munster, founder of Loop Ventures, a longtime Apple analyst. The potential scenario, Tesla being acquired, renewed attention this week when news broke that Apple reportedly bid $240 a share for Tesla back in 2013. Tesla shares have tumbled now to roughly $197 a share, although taking into account the additional shares Tesla has issued and the debt it's taken on means an acquisition now would still cost significantly more than it would have in 2013, as Real Money columnist Timothy Collins pointed out. Munster told the street that if Tesla was to be bought out now, he thinks there's a 50% chance that the buyer ends up being one of the deep-pocketed tech juggernauts with an interest in electric and autonomous vehicles, which is Apple and Google, or even Amazon. And amongst those three, I think it's probably 60% chance it would be Apple, 30% chance it would be Google, and 10% it would be Amazon, Munster said. So we're going to look at three of these companies. Apple has a good fit with transportation. Apple's developing its own electronic car project called Titan, into which the tech behemoth is devoting significant research and development. Apple is somewhat behind other tech players in transportation and so may be willing to spend on acquiring Tesla, Munster said. Apple could also leverage its experience in artificial intelligence to create a successful vehicle, Munster noted. On top of that, Apple has a whopping $225 billion in cash on hand. So if there's one company that could afford Tesla, I do definitely think it's Apple.
But the reality is, being long equities makes sense. Being long innovation makes sense. Betting against entrepreneurs that are changing the world has never been a profitable endeavor. Why start now?
But anyways, that's enough about Tesla. I just want to touch up on NIO real quick before I end this video. NIO stock currently trading near $4 is now down more than 30% from its September IPO price. Perhaps the startup isn't the next Tesla after all. NIO may still lack the scale Tesla has at this time, but NIO is being built from the ground up to become and remain profitable. Indeed, it's being careful almost to fall. It's still unclear that's the case for Tesla, which would be a great talking point that's so far been underutilized. And for what it's worth, given China's aim for becoming the world's leader in electric vehicles, it would be naive to think NIO isn't going to get all the help it needs, as well as become a global alternative for Tesla. But the one thing I might disagree with this statement is NIO has a lot of competition. If China sees another electric car company thriving, I do think they would just leave NIO hanging. The bottom line on NIO, give it time, though it'll turn out fine. Remember, Facebook was a train wreck coming out of its 2012 IPO, getting more than chopped in half within a few months. 5 years later, it's up nearly 500% from its public offering value. Comparing NIO to Facebook, those are two completely different companies, but I do understand what this writer is trying to say. And I still think NIO is an extremely risky company. Right here we have an article where it talks about even under $5, NIO stock is still highly risky. Normally, as the stock declines in value, it becomes a more attractive purchase. This may be a rare exception to the rule. NIO's share price represents the market's confidence, or lack thereof, in NIO's prospect. If NIO stock continues to tank, it could become difficult for the company to raise any more funds at all. While it's attractive to think about NIO stock as the Tesla of China, that may be an ambitious comparison at this point. For one thing, NIO has minimal investments in battery charging swapping. Unlike Tesla, it relies on public infrastructure for this service. Given that NIO has no edge here or in manufacturing, you have to wonder what will make NIO stand out in a crowded market. The company is making a strategic play to become a luxury brand, but given NIO's huge cash burn and cratering stock price, they may run out of time before reaching profitability. Even under $5, you should only look into NIO stock if you have substantial risk tolerance and go into it knowing that you may lose most or all of your investment. To summarize the video, pretty much that $10 price target ridiculous. Elon Musk, even though I don't believe in a lot of things he does or the way he runs the company, at the end of the day, Elon Musk is slowly changing the world. So that's one thing you can count on. Although I do think it's scary times for Tesla, and maybe this year might not be a very good year for Tesla, I do believe in Tesla's future. NIO, I definitely believe is a gamble, but it's a gamble that I'm willing to take a small risk on because I do believe electric cars are the future, and I do believe China has a huge market, especially for electric cars. But that's it for this video. Let me know your opinions in the comment section below. If you guys enjoyed this video, don't forget, leave me a thumbs up, hit that notification bell, smash that subscribe button. I'll see you guys on my next video. Bye-bye.